Hello, everyone. I'm Andy Wong, and welcome to the Australia Investment Life channel. I believe many of you have some insights into Australian real estate, and there is a lot of different knowledge available that you can research in the online world. However, I have discovered that there is a type of real estate in Australia, along with some related tools or opportunities, that is rarely mentioned, and the amount of money involved might actually be something people invest in. The amount is small enough for individuals to try out, or you can even consider it as a reference for a larger project. So, what exactly is the theme of this type of real estate? You can continue to pay attention to this episode's educational sharing. So, what's in this episode? Well, part of it actually corresponds to my recent regular interviews in Hong Kong, which are on Thursday nights at 10:30 p.m. Hong Kong time on Hong Kong's NOWTV Global Financial Express. I've been collaborating with them for many years. In this recent interview, we talked about how, due to certain tariff scenarios and in the investment field, how I currently view Australia's economy. The Australian stock market, what impact will tariffs have? And which sectors are attractive? One of the sectors is actually the content of my educational sharing in this episode. It's about Australian real estate investment trusts, which might be a sector worth paying attention to. If you're interested in watching this interview, I'll put the link at the end of the video for you to refer to. As I mentioned earlier, real estate investment trusts, or REITs, might be one of the sectors worth noting in Australia right now. The content here can be quite flexible depending on the preferences of different investors. If they like, they can invest a large sum to buy an entire project, or they might participate in real estate trust funds, or ETFs. To seize this opportunity, I'm not saying which specific fund or ETF is performing well, but I hope to give everyone an overall sense through the performance of an ETF to see why Australian real estate trusts might deserve more attention right now. Here, one of the ETFs. You can see the trend over the past 6 months. Overall, in the past few months, there has been some decline, but one of the reasons involved might be because interest rates during this period have been relatively, that is, the long-term bond yields have gone up, causing the price of real estate trusts to decrease. And coincidentally, another real estate trust ETF has also been declining over the past few months due to this macroeconomic factor. However, I want to add a point here, which is that if we look at the chart over a longer period, real estate trusts have actually been in a significant downtrend cycle over the past few years. One of the reasons is the sharp rise in interest rates, and another is the uncertainty regarding the economic outlook. Especially in the case of real estate used for commercial and industrial activities, over the past 2 years, it has been one of the asset classes that have been sold off and abandoned globally. However, this is the third ETF, and its performance and trend are quite similar, showing a decline over the past few months. But as mentioned earlier, it seems like we've reached a low point in a very pessimistic scenario. Will it start to rebound afterward? Because there might be many pessimistic scenarios that have already been factored in. This has been reflected, and I will continue to share more with you shortly. The following content is also related to what I mentioned in my recent interview. What kind of data did I see that led me to make such comments during my interview in Hong Kong? Alright, let's first look at one of the highlights that could impact Australian REITs, which is the interest rates seeming to have peaked. Additionally, the RBA, which is the Reserve Bank of Australia, appears to be expected by the market to become the last among mature markets to start cutting interest rates. You can see on this chart, there are many lines But don't worry, it's just to show you that at different times, it might be through financial instruments, looking at the possibility that, starting next week, as early as mid-February, there might be interest rate cuts. Furthermore, people are expecting that the rate cuts this year, as we mentioned before, might reach around 3.5% by the end of the year. Among these, Bloomberg's data, represented by the orange line, is more aggressive compared to the market, suggesting that the rate cut pace this year might happen faster than the current market expectations. This is important, not just about whether the pace is fast or not, but if the rate cuts actually begin. Traditional wisdom tells us that REITs will benefit. This is because it might allow them to continuously manage their financing costs to develop their businesses. Therefore, with a reduction in financing costs, it becomes easier for them. Furthermore, it might enhance their ability to distribute dividends. Thirdly, when rate cuts occur, there is a chance that economic activities will gradually pick up. As the economy rises, it could also benefit some of the REITs businesses. Therefore, traditional wisdom suggests that a decrease in interest rates could be favorable news for REITs. So, in this regard, let's take a look. When the RBA cuts rates, it seems that we might not only consider buying individual houses, townhouses, duplexes, or apartments. We might also want to pay attention to some markets related to REITs. As mentioned earlier, there is a chance for the Australian economy to recover. Now, people might have different views on this, but regardless, a lot of data shows us that the Australian economy is in a stable condition. For example, the unemployment rate is still at a healthy level, and the economy is experiencing steady growth, although it's not rapid growth. The chart shows the white line, which represents the GDP that we often mention. This is usually how we assess a country or region over a certain period, typically annually, to determine the value of the goods and services they produce. In simple terms, the larger the GDP, the stronger the productivity of that economy. So during this period, overall, we see that the accumulated GDP actually shows that the capability is quite high. However, people might feel that in their daily consumption, they don't notice it. This orange line is something we shared with our clients during seminars in Hong Kong 2 years ago. It represents GDP per capita, which is the average GDP per person in a country. By dividing the total economic value by the population, we can see the living standard of each person. If this GDP per capita, represented by the orange line, is higher, it indicates a better quality of life for everyone. Conversely, if it declines, it suggests that their purchasing power might be eroding. We can observe this in the chart, where Australia's economy has been doing well over the past 2 years. However, in terms of consumer sentiment, it feels like they are entering a recession, similar to the orange line, but with the RBA potentially cutting interest rates and the economy not being too bad. The market is anticipating that there might be a chance for per capita purchasing power to finally recover. After the past 2 years, this could lead to a gradual rebound or a bottoming out and recovery in consumer spending. So, in this chart, we can see that if these situations occur, there is a chance that it could support different types of REITs in the market. Actually, REITs, or real estate investment trusts, encompass a wide range of categories. However, what we commonly see are shopping malls or commercial real estate, like office buildings. Here, we use some data from Bloomberg to show you that in Sydney and Melbourne, the rental yields for premium commercial properties are starting to become attractive again. As you can see, The blue line represents industrial properties, the orange line represents office buildings, and the pink line represents shopping malls or retail spaces. Overall, we can see that after a period of adjustment, the rental yields are starting to become attractive. One reason for this, besides the recovery, is that during this time, Australia's interest rates has started to peak. There is an interest rate advantage here, which we refer to as the interest rate spread. From this perspective, the larger the interest rate spread, the more beneficial it might be for management companies. This is because it could enhance their competitiveness and potentially increase their business revenue. This is one of the trends worth noting. Moreover, we also need to look at another important factor that significantly affects prices or rents, which is the vacancy rate of office buildings. Of course, people will also consider whether rental income is stable, and they will pay attention to these figures. We will refer to some numbers from Bloomberg, where you can see the orange line representing the vacancy rates, which they are predicting will start to change. To decline. One of the reasons is that the supply and demand situation might temporarily reach a balanced level. Yes, by around 2027, according to this chart, there might suddenly be some new and more noticeable supply increases. So for now, it seems that there is a chance for the improvement in the vacancy rate to be supported. Some REITs' business operations and their ability to distribute dividends. So overall earlier, I went through some economic scenarios with everyone, some interest rate change scenarios, and even vacancy rate scenarios. These are some of the risks that might need to be considered when investing in REITs. Of course, every investor needs to assess for themselves whether these types of assets are suitable for their own situation. But if I personally feel that the risk-to-return ratio is becoming attractive now, then I would also consider the dividend yield. As you can see here, I've covered up the names of several real estate investment trusts to allow everyone to objectively view the overall market situation. Let's compare. If we look to the right, the one on the far right represents the Australian stock market and its current dividend situation. The orange line is below the pink average line, so overall, it's relatively less attractive. However, if we look at those that might benefit from the current macro environment, among companies influenced by macroeconomic factors, the dividend payout ratio is generally starting to return to or even exceed the averages of past years. These are relatively more attractive, so when doing your own research, you might consider whether these are reference figures you can use to help you choose suitable targets. Alright, as mentioned earlier, REITs have many types. We mainly focused on sharing commercial buildings in Sydney and Melbourne. The main reason is that in the past few years globally, people have been quite pessimistic about commercial office buildings. However, as shown in the educational sharing earlier, the trend has started to change, hasn't it? Is it only them who will benefit? Well, I don't think so, but we also need to understand exactly.
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me.
Earlier, I shared in my interview on NOWTV about some aspects of Australia's economic situation and there might even be some advantages for Australian real estate trusts. But everyone should remember that there are currently uncertainties in the macro environment that could have an impact at any time. These impacts might not be as significant as everyone imagines. For example, looking at this chart, we can see recently it seems like the United States and Australia have been in talks. Additionally, despite Trump's comments about tariffs on things like aluminum or steel, if you look at this chart, you'll see the orange section, which shows that Australia's exports to the United States are actually quite small, so the actual impact might not be that significant. However, people are concerned about whether there might be indirect effects, especially on neighboring countries or major export partners. You can see the related white lines here. For example, if major export partners like China, Japan, and South Korea are affected by U.S. tariffs, will it also impact Australian companies in related industries? This is a point of concern for many, as there is often a sense of unease since Trump frequently changes his stance. It creates a lot of uncertainty. As a result, businesses might become more conservative, affecting their confidence. There is a tendency for the narrative to be pessimistic in the media, but if we look at the actual scenarios that are likely to occur, it seems that the impact on confidence is greater than the actual impact. Therefore, sometimes it's beneficial to be more objective and not follow the news too closely. In a situation where the overall environment hasn't changed, there might actually be many different opportunities happening. As I have been sharing with everyone for many years, as an investor, I believe one's investment portfolios should be well diversified. Besides being a home buyer for your own residence, you should also invest in global assets. For example, in this episode, I use the example of Australian REITs, or real estate investment trusts, to show that real estate investment doesn't necessarily mean you have to buy a physical property. Whether it's a physical property, an apartment, or a townhouse, you can actually use different investment tools to potentially achieve the returns you desire. Of course, every asset has its own appeal and risks, so I hope that after this educational sharing, everyone will take some time to do their own research and even discuss with friends and family. Talk to them or have one-on-one discussions with some professionals. Alright, so today, this is the end of our sharing about learning from Australian real estate. If anyone has any questions, remember to leave a comment. Or if you want to watch my interview on NOWTV, you can also look out for the link that will be shared later. Thank you all very much.
Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.